Welcome back again. Our institute has released 20 case scenario based MCQs, starting with the first one applicable for May 23 and November 23 examinations. The first one is on residential status. Mr. Sashikant, aged 45 years, underline 45, is an Indian citizen, please underline Indian citizen, and a member of the crew of a Singapore bound Indian ship. Now, person who is Indian citizen and a member of crew of Indian ship, then residential status will be governed by Rule 126, which we had discussed in the class in this chapter called residential status. Reading further, is Indian citizen, member of crew of Indian ship, engaged in carriage of passengers in international traffic, departing from Chennai port on 29th May 2022. That's irrelevant. Okay. Now, what will be the residential status for this guy? Normally, the two basic conditions applicable to determine residential status are: first one is presence in India of 182 days or more in the current previous year, or second basic condition contains two sub conditions: 60 days or more in the current previous year, plus 365 days or more in the preceding four previous years immediately preceding the current year. Now, instead of 60 days, a person who is an Indian citizen and leaving India as a crew member of Indian ship, then if you recollect, then who is a citizen of India and who leaves India in any year for employment outside India or as a crew member of an Indian ship, then the second basic condition, part A, 60 days will be replaced by 182 days. So coming back here, so here he will be resident if he is present in India for 182 days or more. If you observe, the conclusion of the story is that the second condition is not to be seen. He will be resident in India only if he fulfills the first basic condition. Okay. Secondly, as per Rule 126, the date entered into in the continuous discharge certificate with regards to date of signing, date of joining the ship, till the date entered into in the continuous discharge certificate in respect of signing off from the ship by Shashikant, this much period will be excluded from the date of or from the period of presence in India, which is the date entered into in the continuous discharge certificate in respect of joining the ship 29th May 2022, namely the date on which ship is departing from Chennai port. And what is the date entered into in the continuous discharge certificate in respect of signing off 19 December 2022? The question is, according to Rule 126, he will not be deemed to be present in India from 29th May 22 till 19 December 22. So for how many days he was not present? Normally what happens is the date of leaving India 29th May 2022. Normally for a normal person like you and me, the date of leaving India is counted as presence in India, and the date of entering into India is also counted as date of presence in India. But as per Rule 126, for a person who is Indian citizen and a crew member of Indian ship, the date of leaving India and the date of returning to India, both the days will be counted as outside India. What is Rule 126? We had discussed it in the class in the residential status chapter. Rule 126. For the purpose of Section 6 Clause 1, an Indian citizen, an individual being citizen of India and a member of crew of a ship, then the periods of stay in India shall not include the period beginning on the date entered into in the CDC in respect of joining the ship. The period of stay in India will not include the period starting from the date of leaving India, the date of joining the ship, and ending on the date entered into in the continuous discharge certificate in respect of signing off by that individual. Both the days inclusive, meaning thereby he was not present in India for 3 days of, how many days he was not present in India? 3 days of May, 30 days of June, 31 days of July, 31 days of August, 30 days of September, 31 days of October, 30 days of November, and 19 days of December. 19 December also he will be counted as outside India. Had this been your case or my case, a normal person who's not a member of Indian ship, crew member of Indian ship, then 29th May and 19 December both would have been counted as presence in India. But for this guy, he will be deemed to be outside India. What is the total? 1, 2, 3, 4, 5, 6, 180, 182, 183, 183 plus 22. Total will be 205 days. 205 days he is outside India. That means how many days would he be present in India? 365 days minus 205 days. He is present in India for 160 days. 160 days he is in India. That means he does not fulfill this condition. He will be non-resident. Okay. Now further, he stayed in India in the last 4 previous years. preceding the previous year 22-23 for 400 days. So this condition would have been satisfied, second B, but that we don't have to check only for Indian citizen who is a crew member of Indian ship. And for a period of 750 days in the last 7 previous years preceding to previous year 22-23. Now this information is relevant to decide whether he is ROR or RNOR, but he turns out to be non-resident in India, therefore we don't require this particular information. He received salary of 7,20,000 Indian rupees in his NRE account, non-resident external account maintained with State Bank of India, Chennai branch. Now this is an account which is maintained in India, but as the name indicates, non-resident external account means funds can be deposited only from a place outside India. This account, though it is maintained with State Bank of India, Chennai branch, then also this account would be deemed to be located outside India, and any receipt in this account will be deemed to be received outside India. It is deemed to be received outside India. Now if you can understand, this particular amount 7,20,000, whether it is salary or any other income, it is received in connection with services rendered outside India during those 205 days of stay outside India. Therefore, place of accrual of this 7,20,000 is outside India, and even the place of receipt also is outside India, and this person is non-resident. Therefore, if everything is outside India, then this income, this 7,20,000 will not be taxable in India. I'm writing NT, that indicates non-taxable. Further, he also furnished the details of his other income earned by him during the previous year. 1, 2, 3. So total 4 incomes are there. This is the first income, salary, then 2, 3 and 4. Total 4 income. Next is dividend declared in the month of April 22. Now dividend is taxable in the month of declaration, in the year of declaration, which is in the current year, by X Limited, a Singapore company. The same was received by him in Singapore. So as far as this dividend income is concerned, 1 lakh rupees, the place of accrual is not given, but by default place of accrual will be that place, that country where the company declaring dividend is located. Company declaring dividend is located in Singapore, so place of receipt of dividend is Singapore, place of receipt is given to us as Singapore. So both the things are outside India. This will be kind of foreign income, and since he is non-resident in India, this income will not be taxable, NT. Second income is agricultural income from land in Pakistan. Now agricultural income from land in Pakistan, so section 10(1) exemption is not possible. It is received in India. So place of accrual is Pakistan, but place of receipt is India. Therefore, though he is non-resident in India, then also this income will be taxable in India because it is received in India. Third and the last income, rent received from house property in Chennai. This is typically an Indian income. This will also be taxable. However, what will be taxable will not be 360. 360 is a rent received. So we will have to convert it into income from house property. We know pretty well we will have to subtract 30% standard deduction. Standard deduction at the rate of 30%, because 3,60,000 is a rent. Standard deduction will be 1,08,000, that is 30%, and the balance income will be 2,52,000. What will be taxable will be 2,52,000. This will be Indian income because it is accruing as well as received in India. Only two incomes are taxable, 2,50,000 and 2,52,000. 7,20,000 is not taxable. We have already written. 1 lakh is also not taxable. Dividend. So total income, taxable income will be 5,02,000. Okay, based on the facts of the case scenario given above, choose the most appropriate answer. Point 1.1, what is Sashikant's residential status? The answer is non-resident. We have already calculated it out above. Because he is present in India as per rule 126, is present in India only for 160 days. 205 days he was outside India, therefore he is non-resident, does not fulfill the condition. You don't have to solve this. This is MCQ. You just have to select the correct answer. What's institute's answer? Let's check. Institute's answer is also C, non-resident. Then second, 1.2, what would be the total income of Sashikant? Total income of Sashikant, we already calculated around. Assume that he does not opt to pay tax under 115 BAC. Income will be 2,50,000 and 2,52,000, which is rental income from property at Chennai. Total will be 5,02,000. We already calculated it out above. 7,20,000 is not taxable, and that dividend of 1 lakh rupees is also not taxable. 5,02,000 is the answer if he does not opt to pay tax as per 115 BAC. Institute's answer is also C. Our answer is correct, 5,02,000. Then 1.3, assume for the purpose of answering this question, only for the purpose of answering this question, assume that Sashikant has transferred his house property in Chennai, from which he receives income of 2,52,000, to his minor married daughter on 1st April 2022, from the beginning of the current year, first day itself only. and his wife is a housewife and does not have any income. Now here section 27 clause 1 deemed ownership will not apply. Deemed ownership is applicable only when the property is directly purchased, if the house property is transferred for inadequate consideration. Section 27, we had discussed it in house property chapter. In 6 cases deemed ownership concept will apply. Second point was house property transferred for an inadequate consideration to a minor child, but not being a minor married daughter. What is the key here is not being minor married daughter. Now here Sashikant is transferred to his minor married daughter is given. Since it is transferred to minor married daughter, section 27 clause 1 will not apply deemed ownership, but clubbing provisions given in section 64 1A will certainly be applicable. However, as per clubbing provision, income of minor married daughter will be clubbed in the hands of that parent whose other income is greater, and it is given that Sashikant's wife is a housewife, does not have any income, therefore it will be clubbed in the hands of Sashikant only. However, in case, what will be the answer? Then minor married daughter receives rent from house property. In such case, total income as per normal provisions of the Income Tax Act, total income will remain same 5,02,000. The only extra thing is, as per section 10 clause 32, 1500 rupees of exemption will be available, which would not have been available otherwise. The net income taxable will be 5,500 in the hands of Sashikant. 5,500, first point, 5,500. Let's see what's Institute's answer. Institute's answer is also 5,503. Last MCQ 1.4. If Mr. Sashikant would like to minimize his tax liability and consulted you to compute the amount of the same for the previous year 22-23, accordingly his tax liability rounded off would be, so minimize the tax liability. That means we will be having two options. One will be calculate tax under section 115BAC, and second, calculate tax under normal provisions of the Income Tax Act. Normal provisions would mean under the old tax regime. Okay, let's calculate it out. His income is 5,02,000. Income is not 5,500. This answer is only for the purpose of 1.3. Otherwise, his answer is 5,02,000 as we calculated in 1.2. Now, if his income is 5,02,000 and he is, how old is he? Is given in the first line that he is aged 45 years. That means basic exemption limit will be 2,50,000 for him. Let's calculate it out. 5,02,000 is the answer. In case normal provisions are opted for, normal provision, then first 2 lakh rupees tax will be nil, next 2 lakh rupees tax will be at the rate of 5%, 12,500, and next balance 2,000 out of 5,02,000, balance 2,000 will be tax as at the rate of 20%, tax will be 400. Total will be 12,900 rupees plus 4% health and education cess. 12,900 into 0.04 will be 516 rupees. Total would be 13,416 rounded off to the nearest multiple of 10 rupee, 420. In case he opts for 115 BAC, then income will still remain same, 5,02,000 only. Standard deduction from house property is allowable even if opted for 115 BAC. What is not allowed is a loss, set off of loss from house property chapter. Under this section 115 BAC, tax on first 2,50,000 will be 0. Next 2,50,000 will still be at 5%, same as normal provisions, 12,500. But difference will be created here. Balance 2,000 which were getting taxed at 20% here it will be taxed at 10%. Next slab is of 10%. 200 will be the tax. Total would be 12,700. 12,700 into 4% health and education cess. Surcharge will not be attracted. 12,700 into 0.04, 508. 508 is a health and education cess. Total will be 13,208 rounded off to the nearest multiple of 10 rupee, 13,210. Out of 13,420 and 13,210, minute difference of 210 rupee. The correct answer will be 13,210 B. Our answer is correct. Institute's answer is also 13,210 and not 13,420. With that, this MCQ case scenario 1 is over. See you in the next video with case scenario number 2.